Hi, welcome back to my channel. It's June 17th. First, I want to start off by saying I am not a financial advisor, so this is not financial advice that I'm giving on here. So, since the making of my last video, the Nasdaq is down a little over 10%. S&P 500 is down a little over 10%. We are now officially in a bear market as the market continues to fall and as it continues to sell off. So where am I at? My strategy is still the same. My price targets have changed a little bit since the Fed came out and has raised interest rates. And I believe they're going to keep raising the interest rates monthly until I don't think they'll ever really get inflation under control. They can try, but the way they're doing it now is like I don't think it's going to work. They would have to really, they're so far behind the inflation that it's just not going to work what they're doing. So anyways, let's talk about some of the stocks and where I think this market is going and how low it's going to go. So anyways, we have the tech stocks are getting hammered, as you see in this sell-off. And you got to remember, these tech stocks rely heavily on borrowed money. And as long as the interest rates are around zero and, these tech companies were able to borrow money super cheap. And, it made their, for a long-term investor, that's great because these companies, they can take that cash that they borrow and, use it to reinvest in the company and do things with and start new projects. But now, as the interest rates go up, these companies, they got to pay that money back. So it affects the profits in the long term. So these companies are still selling off. And I'm going to give you some examples of, companies that are big, huge companies. Netflix, Facebook, both those companies they're continuing to decline. They're still going down. And I don't believe they'll ever reach the valuations they once were. Never. They'll never come back, those two. They're continuing to fall and sell off. Amazon is still falling, even though they tried that, a stock split. I've told people on here in comments, stock splits mean absolutely nothing. If anything, companies are using those now to try and, because they know their companies are nowhere near valued where they're at, so they come out with these stock splits to make young people who don't know any better, oh yeah, the stock's cheap, let's buy it. Because you're not looking at valuation. It doesn't matter. Even since Amazon has done this stock split, they continue to fall. It's still falling. Okay, Apple's falling. Look at Intel. Intel is still falling. They've got they're a great chip. Intel's going nowhere as a company. I mean, they are great. They've got a big moat around them. They pay a great dividend, and their stock's falling. And their PE ratio is like 7. It's insane. But you look at Amazon, who's got a PE of 50. Tesla, who's got a PE of between 80 and 90. You've got Apple with a PE of around 23 to 25. Microsoft, the same thing, 20 to 25. People, these valuations, Google at 23, all these companies are down. Apple's down over 30%, Microsoft approaching 30%, Amazon down 40%, I think Netflix down 75%, Facebook down over 50, between 50 and 55% down. These markets got a long way to go on this downturn. They're coming down. And the value stocks are only down, the blue chips, they're only down, 15, not quite 20% yet, but they're next. All the small companies, they're way down. So what I'm looking at, I'm looking for this sell-off to just continue. I'm not buying these bounces. Any bounces, they're just going to destroy these bounces, and it's just going to keep plummeting these prices. I've said this in these last videos. I was talking about a 40% or more market crash in the tech stocks. No, it's going to be a lot worse than that. What I believe now, from what I'm seeing, I believe QQQ ETF will be trading in the next year or so for somewhere between $150 and $200. Okay, that means that the Nasdaq will probably go down between 70 and 80%. All right, and the S&P 500 between 50 and 60% down from its all-time high. What I'm waiting for to buy, I'm an index investor, so what I'm waiting for to when I sold the last of my QQQ shares. I sold them back in November, I believe it was November 19th. I got $403. So I caught that top pretty damn good. And was it by luck? I don't think so, because I wasn't using a luck strategy. When I sold the last of my tech stocks, I had seen that a lot of the big players were selling out of their insiders that owned these tech companies were getting out. When they were getting out, I'm like, you know what? It's time. It's time to get the hell out. So I sold out of those. Now I'm still in the market. I'm 50% in on my Roth IRAs. I'm 50% in the market still. I'm 50% in cash right now, and so yes, I'm trying to time the market. I believe I can. I believe I will. And even if I bought in right now, I'm still ahead of the game from where I was at. But I'm not biting right now. I'm going to try and I'm going to come in when this market is probably. I'll start coming in when the S&P's at least 35% to 40% down from its all-time highs. I'll start deploying some money and buying some ETFs. I'm an ETF and index fund investor anyways. I'm not trying to time any one company. But what I'm waiting for and what I'm looking for and what will happen is all these big tech companies that actually make up about 40% of the Nasdaq and 40% of the S&P 500. They're all big tech companies. I'm waiting for all of them for their PEs to get down to about 10 to 15, and they will. When that's happening, even though you got to wait longer for Apple and Microsoft and Google and Tesla, for some reason, I don't know how the hell Tesla's hold up, but Tesla, my price target I've told you was 50. They're doing a 3-to-1 split, try and get people suckered back in there. I believe Tesla, even after the split, will only be about $17 a share. It'll come down to that. I know some of y'all are probably laughing at my video right now that I'm crazy or whatever. That's fine. You can believe what you want to believe. So anyways, when these get down, as I'm waiting for these other companies, these bigger companies, to get down to a PE of 10 to 15, which means Apple would have to drop another probably 30 to 40%. And Microsoft, the same thing. Amazon, I believe Amazon, even after the split, my price target on Amazon is about $65 a share, and it's trading a little over 100 right now. So it's already down 40%. I believe it'll it's got a long ways to go to come down. It's set at PE right now of about 50. So they'll get these companies valued right in this bear market. We're in a bear market now. This is no longer a bull market where you see the prices go up. Every bounce will be sold. They're going to get these companies down to fair value. They'll all have a PE of 10 to 15 or less. There's a lot of them less. Look at Intel. Intel at $37 a share or whatever it is right now. The PE on it is 7, between 6 and 7. They've got a great moat. Their earnings are good. I mean, they're not great, but their earnings, they've been a profitable company for years. They pay out a dividend that's over 3% yearly. And you wonder how the hell. But wait till they hit all these big companies, and that's what I'm waiting for, because even as they're hitting Apple, Microsoft, Amazon, all the underlying companies underneath them, like Netflix, Facebook, they're not coming back up. So they're going to remain down for a long period of time. They're going to stay down and continue actually to go down. So I believe the S&P 500, my target on the S&P 500, where do I think it's going to go? I believe it's going to fall below 2,000 on the S&P 500. I believe it can fall below. So that would put us at probably a 60% down from its high, or a little over 60%. Yes, I believe it's going to get there. I know it's going to 50%. Yeah, it's going to blow right through 50% down from its all-time high. So the S&P 500, I believe, this is just for me. However, now let's go back to what I am not. This is not financial advice for you. However, I do help my son with his Roth IRA. And on these red days, I've been buying him into index funds. I buy him. He's 22 years old. You know, he's got a long ways to go. He's got what would that be? 37 years. You know, till he would be able to take his money out of his Roth IRA. 37 years. He's got a long way to go. Me, I'm getting close. So I had to take some money off the table and try and save up some money, just because I don't trust this market right now. I don't trust where it's going. I don't trust the Fed with their. I think the money printing is over. I believe that part's over. They're going to let this thing play out. It's going to be hell for a while. I believe it's going to be pure hell, but it's needed. The market has got to do this. However, I can't give you financial advice, but if you didn't sell out at the top, me personally, I'm not selling any stocks. I'm holding what I have right now and just riding this thing out, and gonna buy back in slowly as this market goes down, and then hope for the best. That's all we can do. But I believe the market's still got a long way to go in this sell-off. So anyways, I hope you enjoyed the video, and I'll catch you on the next one.